welcome to the next panel, which is on affiliates. Despite myself, I will maintain the offer that if anyone wants to ask questions at the end of the session, they're welcome to. So we'll make some time for that. But yeah, affiliates clearly a hugely established part of global gambling in terms of customer acquisition, retention. But I think it's probably fair to say still an area where there's room for growth in terms of the role in the US market. So a lot of interesting topics to discuss. I guess the first question may be quite a big picture one, but I think one that would be good to sort of set the stage is around, from your point of view, and I'll start with you, Michael. From your point of view, what is actually the role of an affiliate at this stage of the market in this kind of market? You know, what's the actual purpose of what it's trying to achieve?
Okay, so role in affiliate, and again, it depends on what you call this stage of the market. I think the market is in a lot of stages across North America. We have states that, like Massachusetts, will go live on Friday. So the affiliate is out there trying to educate and explain to the public what this all means. At the same time, you have markets that are becoming more mature, but I think still in the early phase of the game, where the affiliate's job is to work with the operator to help bring high-value traffic, where each one gets harder at the low-hanging fruit, and in a profitable way. I mean, we all know that the operators need to reach profitability for this to be an ecosystem that continues to work. That's an interest of the affiliate, so there's going to be some ebb and flow on which operators and what models they use, whether we're on direct pay of a CPA or cost per acquisition or a revenue share. That's going to move around, but the affiliate's role doesn't change much. It's bring in high-value traffic to the operator in a way that makes economic sense.
Yeah, I'd echo most of what Michael said, and to add on that, we really are the tip of the spear when it comes to, one, search queries, but also notoriety. Gambling.com, not as much as Catena or BC. They have brand names that are synonymous with subscription products, fantasy products, just sports betting products that people use to help them bet on sports, and that's very helpful when we're trying to tell the story of an affiliate, of what we actually do versus what some people may have the preconceived notion of. And the ability of us to leverage that helps us, one, with operators specifically, we are the easiest way to generate new customers that are of value. You look at any publicly traded operator in Europe or North America or anywhere, you look at lifetime values, we focus on making sure that we can drive traffic that is meaningful and not bonus abusers or folks that are $5, $10 players, right? We're delivering real substantial players, and that's why affiliates continue to be the most effective marketing arm for the effective marketing lever for operators to pull on.
From my perspective, our utmost goal is to guide the users to the best experience within online sports betting. That shifts over the maturity of the market. Now Massachusetts is going live on Friday. Initial phase is onboard them onto a new platform they don't have any experience with. Some needs to be educated on this is a legal market. These are legal books you can bet on. The education around the offshores that are no longer relevant for you, but you really need to focus on the online regulated books. Educating them to what is online sports betting, what are the features within online sports betting, how does a deposit work, how does live sports, live betting work. That shifts over time with the maturity of the player and what they focus on. They might be more price sensitive over time, and we can guide them throughout that entire experience.
And where do the misconceptions lay in terms of, is that a friction point with regulators? Is it a point where operators don't fully embrace it? Because most of the operators that are scale in the US also have global operations where they'll use affiliates. So is it a point there, or is it a perception point in the media? Like, where do you think the base of the misconceptions lie?
I think largely our misconception is we're affiliate marketers, and when you add that marketing term into anything, we get bucketed in with mass push messaging, where we're up there with television, billboards, social, all of those things we get grouped into, where it's not exactly what we do, right? We're not the antithesis of it, but we also are not actively soliciting customers. We're helping folks that have already showed an intent, that have arrived at one of our assets or one of our sites or one of our pages, or one of the employees, whether it's talent or whomever, And we're helping those folks understand where they can wager responsibly, why a specific operator may be better than another for their specific use cases. And I think that's the difference between a Super Bowl ad and what we do. And I think largely as a line item for operators, we're probably in that same line item, but we also do something substantially different than what most advertising is grouped into.
Yeah, I'll go with that, Max. Good points, and then you add an example of that of Massachusetts, which recently had regulations drafted that said there'd be affiliates couldn't work on an affiliate model, essentially, with the operators. That was rightly the Massachusetts Gaming Commission were trying to do something to help with responsible gaming, to reduce push advertising, not understanding what the affiliate was, which is more of a pull. You have to actually make an action to find an affiliate, typically on a Google search or a Bing search or what have you, or on Facebook, et cetera. So we were a part of the equation to help educate. As said, we're there to help compare. We're there to help protect, so that if you come onto the internet, you're not finding the offshore operators who are illegal in the market now, or have been illegal, but instead we send them to the actual operators of the market. So Massachusetts had this in there as a protection, but after talking to a number of parties, they said, we need to remove that and change that, at least for now, and make sure we revise this, because the affiliate is actually part of this equation for a long-term healthy ecosystem.
And do you think there's, I guess, how do you see the rationalization, if I want to put it that way, that's talked about with operators in the market? You said about how important profitability is. Every operator now is messaging very clearly about what they want to get in terms of profitability. So is that a threat in the sense that could lead to marketing and promotion being turned down? Or is that an opportunity in the sense that you could see more channel shift? How do you see the balance of those two factors?
Yeah, I think it's a good opportunity for us. We're a very efficient channel for them to acquire and retain customers, where the mass media is more expensive, in all fairness, and not nearly as efficient. So I think our position in the ecosystem remains very, very highly relevant for them. And the shift to profitability, which I think is, at the end of the day, is good. It balances the system and makes everybody find a level playing field where we're not overspending, we're not building something that's unnatural, we're having reasonable bonus and promos to our users, which in all fairness, I think aligns the expectations better also long-term between us, the consumers, and the books. So I believe it's a fine and natural development.
Yeah, we feel similar to how Marc does, in the fact that I think for the first couple of years post-PASPA, affiliates, in some cases, you could argue that they were taken for granted because we're sending tens of thousands of customers, but operators are also earning tens of thousands of customers a bunch of different ways, new market, totally addressable market where everyone's up for grabs. I think now they have a deeper appreciation for what we're actually able to deliver in the form of highlight LTV customers, which in a large part that probably hasn't happened, and so you have CMOs and marketing folks, as well as C-suite and board, focused on, if we spend X dollars, what am I getting for it? And we're clearly able to articulate and define exactly what we're delivering to the nth degree, right? You can look at deposits, you can look at activity, you can look at how often they're logging in. You have full access to understand exactly what's happening with the consumer. And I would argue if you took a customer from one of these three companies versus some other channel, a traditional push mass marketing channel, we would have a lifetime value that's at least 2 to 3x what those are in some cases. We're talking gross numbers here.
It's a measurable difference from push advertising. It's something you don't pay for as you do with push advertising on the hope that you have a consumer coming in from the tri-state area marketing, which is probably the most expensive in maybe the world for paying on TV. An affiliate, you don't pay for us to do the marketing until you get a delivered customer, which there is a track record from at least the larger affiliates, probably most of the affiliates, if you've worked with them, on what an LTV is of those players. And an LTV, lifetime value, is a larger number than what you're paying to have those delivered to you. So as we move towards profitability, I would decrease my tri-state area marketing and hope that there's enough so that the people are still starting to do their searches and finding the affiliates to send them to me. I'd also look to maybe what type of models. We do CPA, cost per acquisition, or revenue share. CPA has been the preferred model probably in North America, maybe because of tracking tools or the infancy and not understanding that LTV. We're seeing some shift to that, to make sure it works on both parties so that you can reach profitability. Because a net present CPA is a net present value of a lifetime revenue share if you look at it one way, or you can take it in revenue share. The operators that are here, for the most part, are probably here to stay, at least the large players. So doing revenue share deals may work in favor of both parties because we know they'll be good for it over time, and they know that what we'll deliver will pay out over time. So I think we'll see some shifts around in that, but I think the affiliate is absolutely a part of the ecosystem as they have been in Europe and every other market that is long-standing.
Perhaps worth touching with you, Marc, on rev share. I think BC's probably been the most vocal for the longest in terms of moving to that model. I think similar panel last year, yes, was more of an outlier in terms of rev share. It seems like that the market sort of going around the way. So is that how you see the equation? What's the attractiveness from a Better Collective point of view in terms of moving to rev share, and how do you see it from the operator side in terms of why they want to embrace it?
No, we were strong believers in strategic rev share, meaning where we believe the users get a good experience over time. That's where we want to do rev share. It's not a one-size-fits-all, and we don't want to do it with all of our partners. We believe that our products, our brands like Action Network, caters to a long-term user experience. We have returning customers that comes back every day, every week, every month to engage with our content, with our tech. And having rev share as a monetization model aligns our interest with the user experience, where we are incentivized to keep these users entertained.
And are there any friction points really left? I know historically you mentioned tracking already. I know historically there's been some friction maybe on the regulator side for getting the right framework in place. Is it a sort of an open door that's being pushed against now, or is it still a bit case by case across the states?
Do you mean of the tech supporting the rev share?
In the ability to do it, if an operator wanted to do it and you wanted to do it, is there really any big barriers to that happening now, or is it more about when the opportunity set lines up?
I think it's no secret to anyone here that the tech system supporting the affiliate model in general, be it CPA or rev share, still has a long way to go in the US. But it's no hurdles that we can't overcome. And so the short answer is we can do it if we want to.
Why is it far behind? Has it just not been a priority, or because there's obviously global systems in place with global operators?
I'm keen of you guys' view as well, but it's probably not the highest priority from the books to set up an affiliate system that provides basically immediate reporting, which is ultimately what we need.
100%. You have an expansion phase going that has been going at an extreme pace. Now we have a slowing maybe in states of the next couple of years, election cycles, who knows what's going to change that. So now we'll probably come, just like move to profitability, optimization of models of business, which means optimizing your affiliate channel using some of the tools and technologies that exist in other parts of the world. But it's time. I have to get my tech stack set up to be in the next state, and I have to get live as an operator. That's going to trump the optimization, because one is going to bring in X amount, and one will bring in Y amount. So X trumps Y for now, and Y will soon become more important.
I guess one of the things that I wanted to talk about as well is, I guess, if you were to draw up the market as you'd like to see it, would it necessarily look like this market? This is a more concentrated market than I think we've seen anywhere globally. Presumably, as affiliates, you would rather there were 20 players with 5% than one player with sort of 50. So maybe that's an opportunity in terms of that. If those three big players get their tracking sorted, then there's opportunities there too. But how do you see the market structure? Is that a detriment? And how do you think it will evolve over time? Do you think it will moderate from here, or do you think it will consolidate further?
So I'm a believer in market forces. So right now we have a lot of operators playing, maybe not being profitable. There's going to be some consolidation, some decrease of operators in the market. I get the question, what happens if it gets down to 3? Are the affiliates out of business? All of those are publicly traded. They're going to need to have NDCs, new depositing customers, every quarter in order to continue their growth cycle. Same time, I've never seen a market where, there's a lot of money there, there's only 3 guys doing it, hey, I think I could do it better. There will be new entrants. The barriers to entry here are not what we quite make them out to be in terms of all the regulations, but small guys can come in particular markets. We have some operators that said, I'm not going into Massachusetts, but I'm going to focus on these others. So competition will remain, and competition is what an affiliate needs. We don't need a monopoly market, that's a little more problematic, but I don't see most of the U.S. markets ending there.
I think some of it's also predicated upon regulators revisiting a lot of objects in terms of amount of skins available, the regulatory regime, how easy is it to enter, the cost, the actual cost of entering, also the tangential costs of entering with having people everywhere, servers. There's a bunch of ways to eliminate the barriers to entry for smaller operators where you could see something that's more synonymous with what you'd see in Europe. But generally, as affiliates, we need to show growth as a publicly traded company in the US. I'd love to have rev share, but it's really hard to talk to investors and analysts and talk about the growth when it's predicated on rev share and the activities of a patron. That's tough to tell, where it's, in this case, the more operators, the better. So you do see markets that have, Indiana that has 30-something skins, it's much better than New York, where there's only 5 or 6, and some of those operators don't know how to work with affiliates, or we don't trust their back ends. It's very difficult for the whole thing. For us, if we're talking about a Goldilocks scenario of what the U.S. looks like, it'd be more competition that the regulators could easily enable, and also just having them invest more on the affiliate and marketing back ends than they traditionally have. And I think it's no discount to the operators, but yeah, to Marc's point there, they have a lot of things they need to worry about around compliance. Affiliates is probably not the most important thing to them on a tech roadmap perspective, but if it were, they could increase profitability pretty easily because we're the ones who are supplying the whole machine as a sports betting or, more importantly, an online casino operator.
Yeah. I guess if it was to remain concentrated, RevShare would be the better place to be in, though. You said about the financial markets perspective, but presumably the sustainability element there is easier to sell. Maybe the growth, the sort of growth headwind bit to come is the
exactly what it'd be. We'd have
thing.
some diversification. You could balance where now you're spinning plates to, do you do a deal with one operator on purely rev share? Or do you look for a hybrid deal with another operator? And how do you communicate that to the market on a quarter-by-quarter basis? Or do we have so much competition, I can do CPA deals, rev share deals with a bunch and have a complexion that is significantly more balanced and smoothed out rather than the volatility? Because the hardest thing to describe to institutional investors, like if you look at our cap table or anyone's on this stage, it's very much, are you looking for growth or are you looking for steady returns? And I think that's a lot of the difference that we have to cope with and maneuver around.
One of the things that I think's been increasingly embraced across, I think all of your companies are involved is doing more media partnerships. I guess that's also maybe a slight point of tension with what we're saying about media and push and everything else, but getting into it. So, what's the attraction of media partnerships? Why are all of you guys doing more of them? Why are you doing them now rather than starting with them? What's sort of the story and the evolution there with you guys doing media partnerships?
Yeah, I can start out. It's obviously, we work, for instance, with New York Post. They have a massive audience that we do and do not reach with our products, and obviously it's incremental audience for us. And then the ability to utilize the domain in Google is obviously attractive for us. And can we find a commercial model with the given partner that's attractive for both parties, then it's something we are interested in and will continue to be. And I think we've all been engaged with this, so I think we probably share the same view on it.
Yeah, I think we're very similar to the thesis. It's more for Gambling.com, how much can we realistically chew that we bite off? And so we're more or less big game hunting for fewer larger media partnerships that give us that audience that Marc mentioned, but also the domain authority of those sites where they are, what we were talking about earlier, where you do have a brand name that users are attracted to. If you look at anything, USA Today may have a lot more credence than Gambling.com in some respects. So being able to leverage that is very important for the media partnership. Now, the economics, I think, are something that are very different from deal to deal and state to state and asset to asset. So if we do we have announced our media partnership with Gannett, which is USA Today and their entire suite of sports sites. Equally, on an earnings call or speaking with analysts and capital markets experts, it's what did we get from that deal, right? It's great to announce it and say we're doing all these things, but what is the actual take home from that? What is the contribution margin? What are the costs associated with that? How does that grow headcount, right? There's a bunch of variables that impacts, and being able to succinctly tell that story. At some point, everything comes out in the wash, and we want to be set up to success where we're not holding the bag on some media partnership with one, massive guarantees or a lopsided revenue share where it's great to get the deal done, but what does that look like in a couple of years? So we're focused on the long term, but also we need to deliver growth, which is the very tough way to balance and spin those plates.
Yeah, I'm not going to disagree with Max's points there. We've been probably a little slower on some of the media partnerships because it was, I think, the early days out the gate, some of those were very imbalanced from what we saw on the value of the media partnership being forward weighted on guarantees, et cetera, versus an actual partnership. So we have some good partnerships now that I expect will continue to run more and more of those as the market is sort of balanced towards, okay, a partnership means both sides have to be profitable on this over the long term. And I think there are so many more opportunities out there for media partnerships. Yes, you've got some of the big players nationwide still at play, but there's so many local. And what we found from our business is that having national and local strategy maximizes the business. So there's 70 plus 80 more of those out there potentially, if you can strike a deal where they want to be a partner and you want to be a partner with them.
Yeah, I was wondering that because I guess the US is in some ways unique in the sense the way that the market's grown up, that you've got brands that already have their own massive databases in terms of DFS or in terms of casino. Some of them already own media assets or sort of pseudo media assets. And it's interesting your point there about the sort of rationalization of what those partnerships actually lead to enable those commercials to come around. Do you think it's something that will be done more globally by your companies in the sense that it's now becoming more common in the US than it is elsewhere? Does it still make sense to do those in other areas too? I think the Telegraph's one for Better Collective, for instance, but is that going to expand more, do you think, on a global level, or do you think there's something, again, somewhat unique about the US market for why it makes so much sense here?
I think the spotlight is on the U.S. just because it's one of the newer markets. You have some re-regulation in other parts of the world, but I think that spotlight will be on some other jurisdictions, for example, in all over Europe for the most part, and other parts of South America and LATAM as well, which is where we're hopefully starting to focus, right? But we also don't want to lose sight of what's directly in front of us in the task at hand. But yeah, I think it will be a pervasive concept of media partnerships elsewhere. I think they'll look very different just given the nature of how audience digests content and how they and where and what the topics are and how much. Is a market just one newspaper that people read, whether online or physical, or is there massive competition like it is in the U.S.? So I'll have to jockey for some position there, but I suspect media partnerships are here to stay. It's just the dynamics of them, I think, will change from geo to geo.
I agree, and I think to your point on the spotlight, that was the right word for it. The opportunity in North America is massive and just barely scratching the surface on reaching the entire audience pool, just in the number of states, the type of products, and just the audience in each of those states being realized. So yes, they will expand in other places. Yeah, Latin America, interesting market for future growth, but the total addressable market may be bigger, but the value per player is significantly different. So for us, at least in the nearest term, optimize and maximize the North American opportunity. So I think you'll see more media partnerships here from at least us than anywhere else for a period of time.
One of the comments that's come up, and I guess it's a theme that's not new, is that national versus local. And if you look at the operator side of things, there's a lot of focus on as the addressable population's got above sort of 35-ish%, then there's a sort of pronounced switch towards national marketing focus for operators in terms of efficiency and activation. Is that similar to how you see the opportunities for your businesses in terms of the ability to get payback on what you're putting in, or actually, as operators move towards more national, does that create some pockets on a local level where you can be that local driver? How do you see the local versus national framework?
I think Michael was alluding a little bit to it because I think there's a blend of nationwide partnerships and local partnerships. And just because you're interested in the NFL and you're a big Giants fan, and if you're located in Ohio, there might still be some relevance for local teams in Ohio to cover. So the ability to have both partnerships remains relevant for us, so both local and nationwide.
I think the audience remains local, regardless of whether you want to do national advertising or not. National advertising is more optimized, but it means you may be leaving pockets. And if you're running a highly efficient business, which all affiliates have, very relatively high margin businesses, means you can optimize and run businesses in local and nationally and make a good return. And so we deliver players from both national and local sites, and I think we do it well, and that is where you maximize this business. There are, if everything were national, we'd have one national sports team. Again, we have local teams, local talent, local interests, which in many cases will trump anything at a national level. I want to hear about what's going on with my team in my backyard. Somebody has to deliver that level of news. Why are there so many newspapers still or the like versus just one of those larger guys? So.
Yeah, I think we all have national and local assets, not only in the U.S. but elsewhere. Also product differentiation, right? So in states where you do have iGaming available, we have assets there. You have state assets for sports, and it's media partnerships are purely reflective of our wholly owned businesses, which I think is, one, it's very comfortable for, I would assume, all of us because we have an idea of what we're doing there, but there may be something that none of us are thinking about of way to manage a media partnership with different types of partners that may be bucketed into media partnerships, but may not be a legacy digital or traditional business, that there may be another avenue that we haven't quite tapped into yet.
But you're not seeing, maybe to sort of go back to it, you're not seeing a huge shift in the way that operators are from allocating from local to national. I appreciate there's always been national and local assets amongst your kind of portfolio, but there's not a huge shift there. It's really a matter of doing all of them because they're all still relevant, rather than, doing a national site is 2 times more important than it was 3 years ago. Is that fair, that it hasn't been as pronounced from an affiliate side as it is for an operator perhaps?
Fair to a level. What I think we see is as markets evolve, we have, okay, in West Virginia, when it launched, it made sense maybe to have a local site and a national sites running. Maybe now that it's reached a certain operational tempo, let's say, then it might make sense to roll your local sites into your national site and just focus on the national, because those resources can be, we're companies, we have a bottom line, those resources can be better deployed for more return on that investment. So there's a balance in there. So it's not always one or always the other. A good affiliate, which I say all those up here are, remains dynamic in the marketplace.
Okay. We've got a couple of minutes left. Again, I'll offer to anyone who wants to from the floor. Sure, I'm going to get a mic brought over, I think. That'll be 1 sec.
Yeah.
I can appreciate it. All right. Just make sure. So yeah, Mike Travis with Bet Karma. Going back earlier to, I believe Marc was mentioning it on how the...
She's got your mic right here.
All right, there we go. So going back on how the sports books are kind of situating their structures with the affiliates, the CPAs and the rev share, which are, of course, the only 2 really options they are putting out right now. There's a lot of talk you guys are saying on, well, rev share is better in this ways than the CPA, but is rev share the best case scenario, or do you guys have a dream scenario that whether it takes a year, 2 years down the road, from to implement a new structure that, hey, if somehow they came to this kind of agreement, this would be the nuts for us and how we're structured as an affiliate company?
It's hard to say there's a one-size-fits-all, and I can't give you a binary answer to this. It's a good question. There are elements where a pure rev share makes sense, and is probably the best deal for us. There's elements where a hybrid. There are elements where we can talk about the actual bet placement that happens through our technology and monetizations of this. So it's really unique to the partnership and the products that our partners provide.
I think part of that is, the cycle too. So I like hybrids as much as I like anything else. A hybrid being where you take a portion up front and then you have a revenue share maybe at a lesser amount. We're in a market expansion phase still. We're going to be for the next 10 years. All of us are expanding our businesses and growing here in Latin America, et cetera. So that takes capital. I'd rather not take on debt to do those things. So the more you can use some of that fueling it, so a CPA, or the hybrid, the front end of that, helps fuel some of that expansion cost. Well, then you have the revenue share for the long term. In other environments, it might be as you have enough of that, then you flip to more revenue share. Or again, the operators in North America from the land-based historic are very protective of data about their players. I respect that. So that means a CPA model may be what they push for because you know less about what's going on with the activity with what is their core competency and their player understanding. So again, it will go with whoever we're working with and what best works with them, because it really comes down to the financials. You run a couple of spreadsheets and say, okay, a CPA would equal this versus a revenue share over X amount of expected life or life expectancy of said players, et cetera, et cetera. So I don't know that it has to be one size fits all. I think that would be very monocular. I don't know the right word.
I'm in the same boat as these two, but an effort to give you an answer. If we were a singularly owned company that wasn't publicly traded with a healthy balance sheet with near perfect tracking, I would take revenue share all day. But without those three elements completely being obliterated, we need to come up with something that makes sense, both not only geographically from country to country, but from state to state, while also maintaining a level of growth that's acceptable to U.S. investors, while also maintaining some significant upside for longer-term investors.
Thank you. With all the traffic that these three big companies have, are some of these U.S. sportsbooks and casinos coming to you and asking, what do you need for tracking that's beyond data as CSV files?
Conversation's starting. That's always a slow one. There's I'll say, historic dislike for the affiliate from the operators because they spend a lot on marketing, and why do I then have to have these guys who aren't from my direct marketing and they bring me good players too? So there's some challenges in there, but I think we have a lot of smart operators globally. Some do it maybe more than here in North America. Maybe they've been around longer, but there are some of those conversations here, and so I think that will evolve. Data, business intelligence, especially as you head to a revenue share, being able to share back and forth information can make for a super healthy ecosystem. So I'm an advocate for it. I also believe potentially as an affiliate, having some of that data that we can then white label, you can use that as another actual business model of things you can sell to new startups or whoever who are interested in information, how the market works, or back to the operators to better optimize what they're doing with their data. They hold a piece of the information that we don't. We hold a large bit of the information that they don't about player behaviors. There is a big business there still to be unlocked, and I think there are some companies trying to help with the technologies of that, but it's the application thereof that is in its infancy, I'd say, at least here.
I would agree with that. I think it's 2023, all these operators have the data. They know how to get it. It's a function of whether or not they share it. And our mandate to our commercial team is very similar to what pharma reps used to be. The first one in the doctor's office gets the meeting with the doctor. And for us, you have to be front of mind with the operators, develop relationships, help them understand why they need an X point for one specific piece of data and what that means, and how we can help them deliver not only more customers, but more valuable customers. So it's definitely both quality and quantity, and it's just how do you tease that out of the operator, and a lot of it just comes down to one-to-one relationships with the operators top down.
Do you think this media partnership will outrank all the websites like you guys have, and it will be only super trusted media websites in 1-2 years that are ranking for all the keywords? What do you think about this in 1-2 years term? And second question, will you still be partnering media if Google changed something and they are not that trusted anymore and they don't rank for all these money keywords you get in FTDs with? Yeah.
I'll take the first one. You guys can have the second one. I think it comes down to a function of portfolio management, right? If you look at Massachusetts, for example, we have 2 media partnership sites. We have 1 state-focused site, and we have all of our national sports sites. So it is a function of how do you manage that portfolio for one given term, right? If it's sports betting, Massachusetts sports betting, yeah, that's probably going to be tough to rank for, and we need to be targeted with which asset is going for which terms. But the array of terms that are available, that are monetizable, that have significant revenue, you can find veins in even long-tail keywords and search queries. So for us, it's how do we manage that and also make sure everyone that's at the table gets to eat. And that is a real balancing act that we are working through, and it's imperfect, right? There's no perfect way to say you get that term, I get that one, and we share everything. That's just not how this works. But for us, we do need to figure out a solution for that. And so we look at it, several times a day to understand how do we rank differently. And my quick answer to your second point of it is we deal with Google algo updates every day. It's just a function, maybe not every day, but we do deal with it significantly, and as a result, we just have very quality SEOs across the stage here that handle that every single day.
But I think having multiple assets that are approached differently, again, it maximizes users for if I'm in position 1 and position 2, those that didn't like the answers they got in position 1 to go to position 2. But a Google algorithm shift or a shift in other favorability of terms means term that was number 2 becomes term 1, and so now another site is doing that one. We do some competition among ourselves. It's more difficult to balance that out as you get into media partnerships and the like to make sure you're not hurting your own partnership or yourself by those. But it is a game. This is our business, and this is what we do every day.
Yeah, I think you guys both said it well, but there's no fully accurate amount of websites that you need to have. It's more than one, and it's probably less than 1,000, but it's somewhere in that range, right? And the logic being that you can't use one website to rank for it all, because you'll also end up cannibalizing yourself, you'll have duplicate content, all that jazz. So you need more assets, and media partnerships is definitely a way to reach the more high authority keywords.
I think all of us in some market or other have tried a one-site approach and have realized that is suboptimal unless a market is exceptionally small or monopolistic, in which case then you're not doing many choices anyways.
Perfect. Thanks very much, everyone. Thanks to the panel.
Thank you.